Hi there guys, I hope you're all well and welcome back to another video. In this video we're going to be breaking down how we made 100 pips on Euro JPY last week. Obviously now we are into the summer months, so the market is starting to slow down a little bit. Obviously you do tend to find that the volume does drop, mainly due to the institutions and stuff like that. The people are away from the desks and obviously not as many people are active on the charts. So just before we begin, as always, I just want to remind you that we have now created a free channel. If you are interested in joining the free channel, there will be a link in the description. First one, it's literally, there's going to be trade sent, there's education in there, and just updates with what us guys are doing. So that will be obviously the first link in the bio. If you are interested, then obviously the link is there for you. So what we will do, we will quickly have a look at Euro JPY. We'll break down the confluences that we were interested in. And then from then we will look at the entry, the stop loss, the TP, and just exactly how the trade went. As a quick reminder, I just want to show you here. Obviously, this is just evidence that the trade was sent. So July 4th, I said I'm personally interested in shorts from the red zone here on Euro JPY at this price. In this area, we have a third touch, key level, and 50 Fibonacci, which is what we will go over now. And obviously, we'll use a 50 pip stop loss and move break even at 1-to-1. So let's have a look now at this trade. So if we just look back to where the pullback happened here. So when we were looking at this trade here, and what I'll do, I'll zoom in so it's a little bit clearer for you. We was looking to see that this move happened. So this was the start of the move, and this was the pullback. So obviously you can see if we are looking at it from a market structure perspective, it's not the greatest pullback. However, we did have a pullback here before a further push down like so. And then obviously here we had a pullback allowing us to draw a Fibonacci. So what we'll do, we will first draw the Fibonacci. So from the start of the move to the end, these are the levels we were interested in. So when we draw the Fibonacci, it's a case of firstly, obviously drawing it from a swing high to a swing low, then looking to see if we can build confluence in and around any of the Fibonacci levels. So straight away off the bat, I can see potentially you've got almost like a break and retest area here. So with that, obviously you could say that's a potential area of interest. Now, the thing for me is we like at DVS to have 3 confluences at least to get into a trade. So for that reason, we was looking for extra confluence in and around this area. Now, you can see that price was obviously trending upwards and that has been broken. So now we were looking, right, can we get a trend line in play? So what we did, we drew, if you want to do it there, we drew a trend line from a swing high here, obviously the second lower high here, and then from then we carried on from there. So what we did then, we looked at this and was like, well, to be fair, what we can do, we can actually time the position. So for example, if price comes up to this area today, we're not going to be interested. If it comes up tomorrow, we're not interested. And then obviously just play it from there. So let's just see what happened in terms of the market and the price action. As you can see, the trade didn't trigger. However, now from the next candle perspective, if you are looking, ideally, you want the next daily candle to trigger this position or the one after. Because by doing that, you are timing the confluences nicely, like so that you are making sure you have the third touch, you have the key level or break and retest, and you also have the 50 Fibonacci. So what we will do, we'll get rid of them, and let's just play out what happened. Now, what happened at this point here? Obviously, we had a area of interest there. If we go onto here, we can see that entry price was 139.55 with a 50 pip stop. So if I go here, and I will need a short position. So it was 139.55. We had a 50 pip stop. And on the chart, it said break even at 1-to-1. However, we were actually targeting 30 pips for stop loss break even. For a 1-to-1 position and TP1, you are looking at 50 pips. So if we just have a look now, you can see this is what happened with this position. So you can see it triggered Pretty much a sniper. There was some drawdown, but that's not necessarily a bad thing. You can't predict everything to be pinpoint. If we do drop into maybe, let's say, the 60-minute time frame, we can see exactly what happened with this position. We triggered here with quite a large bullish candle. However, you tend to find the quicker price pushes into a level, the more chance you have of getting a reaction due to profit taking and things like that. Obviously, in terms of the TP2 and my main take profit, I was actually targeting in and around 100 pips. On here, it doesn't look like it hit. However, on CTrader, IC Markets, obviously an FTMO as well, the trade did hit the TP. And yeah, that is pretty much the trade and how it worked. So that was pretty much the position there. You are triggered in. If we go back to the daily, we can just have a look and see exactly how it played out without the profit and loss. You can see price perfectly hit the area. Obviously then we did hold to hopefully get some more pips out of it. However, the next daily candle did in fact take the trade out break even. However, with that, you did manage to hit a TP of 100 pips, and it was simple as that. So obviously in that position there, we've broken down the confluences used, the stop loss, the take profit, the thought process behind the trade. Obviously, if you are wanting to see more trades like this, there is the free group. However, there is also the paid analysis group where most of the positions are sent, hopefully for you to learn from. So hope you guys have learned something from this video. Any questions at all, drop them in the comments. And if not, we will see you in the next